Hi guys, you've probably heard of different tax reform ideas, or flat tax, fair tax, consumption tax, or sales tax. These have been floated around and gain traction, but never get implemented. First of all, because there's many arguments against them in the media, mostly left-wing media, and also they tend to be very libertarian, and even conservatives are not so libertarian. But have, in sort of a shower thought, I have made a blend of these ideas and tried to balance them out, tried to um, close loopholes or disincentivize evasion tactics, try to see a few steps ahead. So let's go through my proposal here. I made a short and I already put it on my WhatsApp and sent it to my state representatives to the U.S. Congress. But I want to give more explanation here and maybe give a few arguments for and against to play devil's advocate. So the first thing is capital gains tax. That's the most commonly known of what I'm going to talk about here. So the problem with capital gains tax is that you're sort of besides the argument of whether um, money that's working in the economy, whether earning money on your money, um, whether we should tax that or not, or whether or is it a matter of subsidizing investment, or is it a matter of you already got taxed on your income and now it's your money that's just making more money? You could argue from different angles. That's not what I'm mostly interested in. I personally believe that it's money on your already taxed money, and therefore, and it also happens to serve an economic greater good. We're not necessarily subsidizing it, but you already got taxed on your income. So that's why I don't think there should be capital gains. Now, the issue here that we're going to highlight is the lock-in effect, um, which is part of the reason why um, the stock market is inflated, part of the reason, and also why the real estate market is inflated. In the stock market, there is no um, rule where you get to if you sell it and then buy another one, you could use not a capital. You don't pay taxes. Whereas in the real estate market, there is that such rule. I don't remember, recall the name offhand. Um, I don't think it's here, but that rule is sort of to protect the real estate market or to help real estate investors. And I don't believe we should be subsidizing one industry over another or artificially stimulating it. The American dream does not need to include owning your home. That's just an American made-up concept, probably by lobbyists. But if you can afford to buy a home, that you're saving money on the opportunity cost of, I mean, you're saving your rent money. There's opportunity cost of your saving up your down payment. That's a whole thing that we're not getting into. But I'm just talking about capital gains here, and trying to remove friction in the market, trying to, right? So practically in the past, capital gains tax or the mere mention of the absolution of that tax has brought the market, I think, somewhat down. And that is the critics of abolishing the tax point to that and say, hey, why does the market sell off if there's capital gains tax absolution or abolishing? And the reason why that is because you have higher volume doesn't mean um the sellout, but initially if you remove the restriction of the reason why people are holding, then you'll have a sell-off. But over the long term, it's just greater volume, well, besides commissions, if you pay commissions on transactions, which most people are not, but there's just greater liquidity in the market. That's the first thing. Now to offset, so the next critique of this capital gains tax um, elimination is that all what happens to all those gains that the person that the rich guy made, um, because he bought his property at one and he's selling it at two. He just made one, right? So under the current rule of depreciation of expensing depreciation of an asset that doesn't really actually depreciate, doesn't actually wear and tear, actually appreciates, that would be a solid argument, right? Because if you're allowed to say that the building cost me um X amount a year, and over 20 years I get to basically expense the entire property, whether I can continue or not expensing the property into negative territory. Um, and then I get taxed on the gains afterwards. So if you're taxing the gains and doing depreciation, it sort of makes sense in a weird way. But if I'm abolishing capital gains and banning and taking away the ability to expense depreciation, I'm balancing it. I'm saying you don't get taxed when you sell a property, but you also don't get to say that owning having the property is an expense. You bought the property, you still own the property. There's no taxes going anywhere. There's no expense of owning the property. And when you sell it, whatever it appreciated is yours because that was always your money, it didn't go anywhere. Um, so if you have to pay money to the electrician and the plumber, and to the drywall guy, right? Then you have to you have to pay for that, and that is an expense. If you're refurbishing, then it's also kind of repairs. If you're renovating or adding or upgrading, then that will be non-deductible because it wouldn't be an expense. It would be adding value to your property, and then that would not be tax deductible, and you wouldn't be taxed on the assumed appreciated growth later. So those are that sort of I think I gave it too many words in talking here. But the third issue is somewhat related in capital gains, but it's about the people who borrow money when millionaires who have millions of dollars in assets but don't have a income, and so it typically is appreciated assets that they borrow against, and then basically they just keep borrowing, but the asset keeps inflating, so they can just look when the bank asks them for to pay up, they just point to their asset and say, "Hey, it's doing fine. You want money? Anytime I can get it." And the bank just keeps giving them more credit. Yeah, if they could be paying it back, or it could be interest only loan, and they could just do that perpetually, right? So what I'm saying is if you borrow against, if you borrow, I'm actually going to go to the document here because explains it a little bit better or is more specific. It's not just it's not just asset backed, even if it's unsecured, because many billionaires or millionaires are able to get a loan from the bank by just pointing to their assets, or the bank knows that they are high net not net worth individual, and they'll just give them a loan based off of that itself. So instead of being secured versus unsecured, it's doing a threshold of $500,000. You could argue $200,000, um, but I guess you could lower it to $50,000 as long as you have an exception for home purchase or higher education, or I mean, if you don't want to make it low enough that a car would have to have its own exemption, because some people will buy muscle cars and say an exemption. So, but back to here. So we say that you're going to get taxed. So we're not saying if you just sold your stock, there's no capital gains. But if you go want to, if you could, because whether you're going to use that money to invest it further, or to use it for your own living, or for spending it, that's your choice. The money that you gained, like I said, under the theory is money on your money. But if you're borrowing it, that means you still have the asset itself. Then we're going to tax you on the loan. Um, Again, if you're gonna reinvest if you're using it leverage to further invest, then fine. We're not taxing you. But we don't want you to own tons of assets, and then make a massive loan, and then when you die, you just say that you basically wipe out the capital gains. But we're not taxing capital gains. We want you to pay taxes on the money that you're if because if you're spending the money, we're going to treat it as income, and therefore we're going to tax it. That's the philosophy here. So if you were just selling it, then you don't have that. Then you sort of you're you're giving away the lie that it was an investment and now it's just income. You're spending it. If you actually are keeping it as an investment, then you can keep the theory that you're making money on your money. Why should you be taxed? That's basically my theory. It's also just more of a balancing act. And the last thing is the transition. So what do we do about people who have depreciated their assets until now? Because are they going to have a massive tax bill now to pay all their depreciation, or are they going to get tax gains? But we want to let them out. We want to let them move in the market. We don't want to tax their capital gains. But we also don't want to let them get away with the past crimes. So we're going to say that we're going to take all your cumulative depreciation. We're going to take the tax on that, and we're going to spread that over the same time period in the future, at the same time as you were accumulating depreciation in. So for 20 years, you were accumulating depreciation on your real estate. So in 20 years from now, you're going to pay up the taxes on that depreciation. And what if the guy is 70 years old and he dies in 5 years? What is his kids going to do? The estate has to pay it up. If the guy was terrible at managing his assets or he was one of these celebrities who took out massive loans more than their assets, then that's just deflation, and then it gets wiped out because you can't hold children up to pay loans. You could deny, you could infuse an estate if it's a negative estate. But that's not what we're talking about here. We're talking about there is assets, there is a loan. Usually we say we don't want to we don't like estate taxes because um there's no let's say there's no liquidity, but we're not demanding the money all at once as a lump sum. We're saying there's an outstanding balance here that was being paid and needs to keep being paid. There's no interest. If you miss a payment, maybe we'll charge interest. And sort of that will balance and recapture the issues of the past and transition us to a more fair future. Again, I have a more. I don't think this really simplifies it. Now let's talk about um what similarities have already been proposed, but haven't caught on, and why this one's different. So where is it? So in the past, there's everyone knows about the flat tax, saying I think it's like 17% or 10% of all income. And then then you already talk about well, the poor people can't afford it, and you have to have the standard deductions. So then it's not really a flat tax, whatever, right? There's there's a sales tax or consumption tax. The X tax is basically flat tax, except that there's a higher tax rate for businesses, and then individuals can have a deduction. Um, and then fair tax is basically the consumption tax. None of these address the borrowing. The thing with the borrowing is that it's more to do with banking, not so much to do with taxes. And I don't think anyone has proposed this. There was George Bush thing trying to reduce capital gains tax. But that didn't go through because people didn't like the Iraq War. So then Gemini gives you a table of stuff. So here Gemini is saying the transition rule is what's sort of left out of a lot of the other plans. Is that what happens to the people who till now who've been under the old rule, right? Then you have to transition them. And then we talk about what's the impediment to the plan? What's the critique? I think I Need to edit this thing a little bit. Right. I'm not a rich guy. I'm barely I don't have a proper career yet, but I have a background in finance. So I have an MBA. I I I believe in in taking up capital gains, in removing really, right? Like I said, money should work for you because you already made your money and paid taxes on it. Now you want to make money on your money, and your money's in the economy, right? And the Roth 401k, Roth IRAs basically are doing it's just basically capital gains tax is what all you're avoiding. So that would make it obsolete, and that's fine. But that's the point. Um, then you want to talk about I'm trying to give the I'm not that but that you want to tax the rich, and I'm taking away the tax on the rich for the capital gains thing, right? But what's the counter argument? It's not really a counter argument that I'm not taxing the rich, but except that the rich are benefiting us by having investments. And what only time that they are spending their money in a unfair way is when they borrow against their assets, right? Borrow to spend. So say if the rich want to keep their money in the economy, like if they want to hold assets or if they're going to borrow and invest more and use leverage, then they have skin in the game and they can go on the water, right? Then you don't tax it. If they have capital gains, if they sell it, then they can either reinvest it. If they spend the money that they sold their asset, they no longer have the asset and they no longer have the economic um, leverage or economic um, they're just a rich guy now. They're not actually like a major gear in the economy, so we don't really care. It's like they don't have once you sell your asset, you don't have the economic leverage, leverage not in terms of borrowing, but leverage in terms of you don't have the that power, economic power. You just have money now, so um you could do what you want with it, basically. Um, that's what I'm trying to say. So if you want to spend it on yourself now, if you're borrowing money, you still have your asset, so you still have the economic power, and you want to have your cake and eat it too. I guess that's the best way to say it. If you want to have your cake and eat it too, then we're going to tax you. That's the central counter argument to tax the rich. That they're trying well, I'm not even addressing a fair tax, a flat tax. I'm just trying to lubricate the market. All right, I think that does it. Please, please, as best you can, share with your friends and send it as a proposal, whatever contact form to your U.S. representative and Senate member because I think this is different. It would solve so much of our current economic thing. Before Trump, doesn't matter. Trump has nothing to do with this. This is part of it. This has been going on for years. This is the artificial real estate asset bubble. There are other issues like the index fund bubble of passive investors. There's issues of the inflation, printing money, and the Federal Reserve. We're not getting into that. We're just talking about capital gains and depreciation and stopping the buy, borrow, die. Trying to the most egregious or sort of the low-hanging fruit here.